This week we're going to continue our conversation with the CMHC mortgage news that's sort of floating around the marketplace as it seems to continue to be hanging around in the headlines. Most recently this week, the Organization for Economic Cooperation and Development, or OECD, had made some recommendations to the Canadian government that they might want to consider transferring the risk from their CMHC portfolio from the government's hands down to the private sector. If you'll recall from last week, I had suggested that I thought that was going to happen anyway. I think that we're going to see CMHC sort of leave the market. They might reemerge as a private company, but this week the news was that the OECD suggested that they actually transfer that risk down to the private sector and reduce the portfolio from what is currently $600 billion. So that's how much insurance the government, or that's how much the government has insured for residential real estate, $600 billion. And the OECD said you should reduce it down to $300 billion as sort of a first step in the right direction. I mean, I've talked about this previously. I've got some pretty strong opinions about it. I think that the government will transfer the risk to the private sector. If you look at how Canada's government, if you look at how our government has performed over the last few years, certainly during the economic downturn, the policies have been very prudent. I think we've made really great decisions, or I think the government's made really great decisions with how they've had to handle the financial markets, and I think that they're very much aware of the risk that CMHC carries for them. And if you believe any portion of the hype right now, which would say that Canada's in a bit of a housing bubble, that today is probably the best day for the government to start weaning itself off of CMHC into figuring out how they can move that entire portfolio down to the private sector. Because the market is strong, obviously it's a good time to do this, but so what? What's the big deal with CMHC anyway? Why do we keep hearing it in the news, and why are we talking about it? Well, I believe, I don't know that this is shared across the marketplace, but I believe that our Canadian real estate market has been propped up by the deep pockets of CMHC. When you think of what $600 billion does to a marketplace, the next two insurers in the market don't even come close to CMHC. I mean, CMHC doesn't just own the majority of the market. I mean, they basically own the market. So if you've bought a home in the last couple of decades and you've done so without having at least 20% as a down payment, you probably have CMHC insurance on your home or have had it on your home at some point. So because the access to insurance has been fairly easy, because it's been plentiful, I mean, $600 billion for a small country, or for a country like Canada that has a small population, that's pretty amazing, and that's forced a lot of real estate activity. That's created jobs. I mean, it's had great economic impact, but my thoughts are that I think it's propped up the market, and I believe that more involvement from the private sector will actually change the face of our real estate market. For those of you that don't know, mortgage insurance protects the bank against a loss when you stop making your mortgage payments. With CMHC, they actually offer a bit more protection for a bank than the other two insurers do. And so if CMHC were to leave the marketplace or find a way to dwindle its market share and give it to the private insurers, I think that we would see some adjustments in approval criteria. I think that it would, because private insurers don't have unlimited funds, they don't have deep pockets, as it were, I think that would kind of change the pricing. I think banks would come up with different policies. I think we'd see quite a bit of change happening. I don't think we'd see it right away because Canada isn't, I mean, a runaway economy, and we don't have a gazillion people that live here, so it's somewhat contained. But I think that now is probably the best time, if there was a time, to start figuring out how to de-risk the CMHC portfolio, give it to private enterprise. Other markets have demonstrated that the private companies do create a different feel in the marketplace, a different set of parameters and variables that people have to operate by. They're more competitive, there's more efficiencies, and then there's also different value adds that come along with it. So what does this mean for you? Well, if you currently have a home with CMHC insurance, it probably doesn't mean anything to you right now, but in the coming years, I think it could mean an adjustment to prices of homes. And I'm not talking about 2% or 1% or a little blip on the chart. I actually think it could be a pretty significant impact to real estate prices across the board. And that probably would impact you. Not today, but over the coming years it would. If you're looking to purchase a home in the coming years, it's good to know what's happening with insurance, because if you don't have 20% or more to put down, chances are you're going to need insurance. And if the rules change or the criteria change or the cost of insurance changes, you're probably going to want to know that and start thinking about it in your planning. I think that there'll probably be new insurance companies coming to the Canadian market if CMHC were to start giving up its market share. I think that at the end of the day, borrowers always need to know what their options are, whether new insurers come to the market, whether CMHC downsizes or what have you. And mortgage insurance is one of those variables that you kind of need to understand a little bit, or a lot, as it were. And at mlenow.ca, it's a perfect place for you to discover that. At mlenow.ca, you can see not only what the insurance premiums are going to be, but overall, you're going to be able to see your down payment, your monthly payments, how much income you need, what the documents are, kind of the questions that banks or brokers or mortgage specialists are going to ask you. And so you should definitely check that out. And so we thank you for watching this Emily Now episode. Hopefully you've found it valuable. We talked a little bit about mortgage insurance for apartment buildings. We walked through an example of a business owner who at the 11th hour has to use private financing to close on a piece of land, and why he did that. And now we've just finished chatting and bringing you up to date on this continued dialogue in the news about CMHC and the housing bubble, and how the government needs to start planning to get rid of the portfolio.